I'm so excited to have Chris Clothier on the show today. Chris got his start in real estate doing fix and flips and eventually snowballed into some partnerships with his family where they started the company REI Nation that now manages over $2 billion worth of assets in turnkey rental properties. It's a really inspirational story and you are not going to want to miss it today. Welcome back to another episode of How I Started. My name is Noah Bacon. I'm extremely excited to figure out how Chris went from new real estate investor to business owner in just a short amount of time. And we're going to talk about today how partnerships can potentially save you or burn you on deals. Chris, thank you so much for joining me today.
Hey, I appreciate it. Thank you. Love to be here.
Absolutely. So like I said, Chris, we're going to, speed up to today. We'll talk about where you are as a really amazing investor, what you've done with your business, but we want to talk to our audience here that's on the BiggerPockets Rookie Real Estate channel and see how you got started if you can reel back time for us. So what was your intro to real estate and what got you into it?
I laugh when I look back at how I actually got started. I'm an accidental investor to begin with, and it kind of led me into the next step. So I really started step one, then step two, step three, and eventually, grew into a professional investor. But the way I got started was like many, I was watching late night infomercials. I couldn't sleep, and there was an infomercial with a guy called Carlton Sheets, and I'm not sure if he's still around today. I'm not sure if they still run. I don't know. I'm not awake late night anymore. But I saw this Carlton Sheets on how to invest in real estate. It was like $99 and I could get 27 CDs and 12 DVDs and, all that kind of stuff. It looks like this amazing package and everybody's driving, fancy cars and boats. And I bought it. I spent $99 to get a big box of, well-packaged crap. But I happened to watch, and I kid you not, I watched maybe one DVD, listened to maybe two CDs. I had my own full-time job. I was working daily. I'd already started my first company. In that CD, one of the CDs, he talked about trading houses as a way to get started, finding assets and trading assets. The way I actually bought my first house and became an accidental landlord was at a home for sale in Tennessee. I lived in Colorado, which is where I had moved to start my first company. I couldn't sell my house in Tennessee. It had been on the market for like a year and a half. And I was out in the country, a house on some land. One day, I got a call from my realtor back in Memphis that said that she had somebody that was interested in the home. They loved the land, but they were having trouble selling their house. Just through conversation, I said, "Where's their house?" And she told me it was in the middle of the city next to a university. In Memphis, is next to Rhodes College. I immediately, Carlton Sheets flipped right into my head of, wait a second. They've got a house near a college. I've got a house out on land. I cannot rent my home, but maybe that's a rental. And I asked my agent, I said, "Hey, I want you to set up a showing. I'm going to come back into Memphis this week and I want to go see their house." And she was like, that's the dumbest thing I've ever heard of. What do you mean you want to go see their house? And I said, just trust me. Let me do my thing. I fly back in. I go to their house. It's a third the price of my house. Tiny little 3-bedroom, right by the university. It's a perfect student housing. I know nothing about investment real estate, but I know that if I can buy their house and create the ability for them to buy mine, just basic math tells me I'm going to reduce my payment by, 70% right off the bat. And I might be able to get somebody else to give me the money every month to pay it. I ended up, after that weekend, I put their house under contract, which enabled them to put my house under contract, did the closings. I had the money from my sale to buy this house. It also gave me the money to buy my primary home in Colorado. I ended up trading a house in Tennessee for a rental property in Tennessee and a new house in Colorado. I had been living in a hotel, by the way, in Colorado, and I was done with that. So I became an accidental landlord. And to be direct, it really jump-started my interest in real estate.
So Chris, now that we've heard about your first deal, can you talk to me about some other deals that you've potentially had low points or how the process has changed from deal 1 to deal 2, 3, or 4 even?
The next steps I took were some of the best steps I ever took in real estate because I self-managed the property in Memphis and it was a disaster from afar. But I learned a lot about it, lost a lot of money, but I kind of learned, the language. I learned the lingo, and it was expensive, but yet I took a lot away from it. I started attending a real estate seminar, a monthly RIA by Bill Bronchick. You had the RIA inside, and then outside the RIA, there was always a group of people meeting. Never inside listening to the speaker or anything like that. They were always out in the lobby. it didn't take long to realize the people in the lobby were doing deals. They were in the game. And I actually asked a couple that was out there. I went up and introduced myself to them, and I asked them if I could buy them a cup of coffee and if they would talk to me about real estate, because I'm an investor now, right? I have my first property, but I want to get active. My business is succeeding. I've got some extra money, and I want to figure out how to do this for real. They were my first mentors. I split my first 2 fix and flips 50-50 with them after writing 50% of the check on 2 deals that I did most of the work on, but they helped me with, of course. You know, I don't want to downplay it, but I knew enough after doing 2 fix and flips in Denver, Colorado, and owning my house in Memphis about a year. It took me about a year to do that, and I was going to go do it on my own. I kid you not. The 4th deal I did, I got a new partner. We partnered in together because it was a big deal. I was scared to lose all my money by myself, so I brought a partner in case, so we both would lose some, but not as much. And I mean, exactly as I had imagined it, we both lost everything we put in that 3rd fix and flip in Denver.
So Chris, what was your biggest learning experience from this deal that gave you momentum to pursue more real estate deals then in the future?
The way I got started and the lessons I learned from those first 4 deals I did was I took information that I was out there and readily available. It cost me $99, but that wasn't a lot of money to spend to learn. Even though I didn't have the discipline and it wasn't good enough to go through all of the information, I consumed enough to put ideas in my head to find a way to get started. After I got started, my next step was I found people that I recognized and knew were doing business. And I was willing to, 1, meet with them and admit that I didn't know what I was doing. And 2, I was willing to split some hefty profits with them, but they knew what they were doing. They didn't need me. I needed them. And what I brought to them was, I'm willing to do the work. I found the first 2 fix and flip deals we did. I allowed them to assist me with hiring contractors. You know, that just the takeaways from all that was just watching and listening. And I surrounded myself with other people who had already accomplished what I wanted. It really helped me. It turbocharged my learning that first year. I made money. When I looked back at it, I was in the positive. And the lesson I learned from from that 4th deal, the one that my 3rd fix and flip was I partnered with somebody that didn't know what they were doing. Their part of the job was critical. They were a real estate agent. Their job was to determine the value of the house we were buying, the after repair value, make sure that we had a solid deal. My job was to hire the contractors and get the work done. As it turns out, like many markets, and I'll just tell everybody on here that comparable sales are not price per square foot and proximity. There's a lot more to it than that. We bought a home that we said was worth, for round numbers, $500,000. And there were a lot of comparable sales within an 1/8 of a mile, within blocks of it, that justified that comparable price. But the reality was exactly where it was located and the exact place where it was, we needed to be using comps on that street or within 1 street of it. And we were using high price comps 2-3 streets away. The house was worth, we thought 500, the house was worth 400. And, what I learned from that was if I don't know what I don't know, I'm in trouble. And I quit relying on people that were financially vested in the deal. And I started surrounding myself with professionals to give me the advice that I needed. Does that make sense? That they would succeed only if I succeeded. It wasn't partnering. I just quit that altogether and said, if I'm going to do this, I don't need a mentor and I don't need a partner. I need to just go and do what I know how to do. And that eventually, led to where I am today. So,
Chris, there's so many pieces I want to dissect out of your response here. But the one thing that really sticks out to me that I think will stick to a lot of rookie investors trying to crack into, the environment or the market here today, you proved yourself with no assets basically and went to real estate investors that were in positions that you wanted to be in. What got, over the hump to prove that you were worth somebody to invest with as a partnership with them? I know a lot of people come into it with no money, no credit. I don't know how to find deals and they want to become an active real estate investor. Was it your ability to find the deals to attract, existing real estate investors to partner with you and cut you a piece of that pie? What was your intro there?
Well, number one, I approached them. All right. So I was perfectly willing to go up and talk to them and ask them questions, which showed them that, and of course I told them, if I need to knock on doors, if I need to make phone calls on leads, if you run ads and I need to take the calls, I'm in. Like I will do the work that sometimes is the legwork. It's the stinky work that people don't want to do. It's fun to do the actual job itself, but to go and find the houses, sometimes it's tough. You have to go through a lot of calls and a lot of rejection, but I was willing to do it. If you have nothing else other than will and attitude and desire, sometimes that's enough. and people will be willing to give you an opportunity.
So, like you said, you've at this point closed on 4 deals. You've learned a lot of things on, potentially who to partner with, who not to partner with. Now you've gotten a pretty good idea of what you're looking for in the area after, like you said, we're going to really hone in on comps to the immediate area. And by immediate, we mean the block that we're buying on. So Chris, now that you're, 4 deals in, you're definitely past that rookie phase in investments. What did you start to look for then? Were you looking for more fix and flips because I'm a master at this niche, or were you looking to kind of pivot your strategy a little bit?
Yeah, it's interesting. I pivoted at that point. I started to recognize that I was a pretty good businessman. I had a business that was growing at the time, the first company I'd started. And then I also recognized I was pretty good at creating relationships, build relationships within the RIA that I was a part of there. One of the things I noticed was a lot of investors were telling me that they were like me, a year before. I've got money, I have a job, I don't even know how to get started. And most did not have the desire to knock on doors or take phone calls. They weren't like me. They were much more passive. I recognized an opportunity. The next few deals I did, I actually bought back in Memphis. And I started building a passive real estate portfolio in Memphis when I lived in Denver. I started to introduce other investors to, hey, if you're looking to invest, but you don't have the time and you're not interested in the active part, are you interested in passively owning? I began to hone my ability to kind of listen to what investors wanted and then help deliver it to them. So they would tell me, I'm looking for this type of a return. I'm looking for this type of cash flow or this type of growth. I'm looking for ease of investment without a lot of my time input. And so I recognize I can buy houses in Memphis. I have a team set up there of professionals that I trust now, because that's where I'm buying, that they can offer those same services to these investors in Colorado. And that's really how our company today got started selling out-of-state investors. I was the first. I was buying houses, of course, with my family, and then began to talk to and help other investors buy those same properties from my family back in Memphis.
That's amazing. And I imagine we're going to fast forward a little bit more to today and hear about REI Nation and how we got started with that. So is that exactly, you looked at your journey as an investor and said, it's going to be a lot easier for a rookie investor to take this opportunity to go and look at turnkey rental properties instead of cut their teeth in fix and flips? Or would you still today recommend somebody takes the Chris journey and learn the fix and flips and then get into turnkey? What's your stance on that right now?
There's a couple of things. There's a lot to unpack right there. I'll just say this. Whatever is most comfortable to you as an investor, that's the journey I would take. And for some, and it's rightly placed, fear is going to hold us back from doing a lot of things because we're afraid of making mistakes. And the reality is that you can make mistakes as a passive investor and an active investor. If you invest next door or you invest in the next state over, there's opportunity to make mistakes in all of those things. Are you the personality and the type that, like me, that's going to go and put the time in? I put the time in at the beginning, going to the RIAs, meeting people, being willing to get vulnerable and tell them, I don't know what I'm doing, but I want to learn. And it's perfectly okay. It's me today. Today, I am the investor that says, I have the ability and the money. I am 100% in on passive. I want to find the best operator, the best opportunity, and let them do what they do well. I don't want to be active as an investor anymore because I'm actively operating different companies, including REI Nation. My advice is do what feels natural, do what you want. If you're excited by the decision-making process and picking colors and finding houses and negotiating, do it. Go yes, you got to learn the steps, go to the RIA meetings. If you see somebody say, man, they buy a few houses a year and they fix them really nice and they sell them and I just love what they do, ask them, may I buy you dinner? Can I take you to lunch? Can I buy you a coffee? Be vulnerable. Tell them, I don't know a lot. I'm not asking you to give me everything for free, but is there anything I can do to assist you? Can I work with you? Can I work for free? Is there anything I can do for, a few hours a week just to learn? And you'd be shocked by how many investors out there and business owners, they are open to that. Especially, I found it's amazing on the real estate side. Real estate investors, we love to talk about what we do. And helping somebody else just feels natural. Not everybody's going to be that way, but you'll find them if that's what you want to do. Now, if you're looking to be more passive, you said a word there that, yes, I own a turnkey company, but I caution everybody that I really say that instead of being a turnkey investor, you want to be a passive investor, as passive as you can be. You're never passive about your management. You're never passive about your investments, but passive just means that you don't have to find the house and you don't have to hire the contractors and you don't have to hire the management. It all should be packaged up together. But turnkey means a lot of things to a lot of people. And so it's very important that you understand forget the word turnkey in my book and focus on being passive. And there's lots of ways to be a passive investor or to have, a little activity or a lot of activity or no activity. But as an investor, don't think that you have to get started doing fix and flips, or you have to start as a wholesaler, or you have to buy turnkey first, then you go on. It's typical for a lot of investors that wherever they start, they gravitate to other things. And so everyone's journey may look slightly different, but all of it is growth.
That's extremely well said, and I think what the end goal is for everybody is financial freedom, and it looks a lot different from everybody's path. And I think, I've lived in Colorado, you've lived in Colorado, we've taken substantially different journeys to get to where we are in our careers. I have far more to learn than you do currently in my career, but it's going to be a different journey, of course. And we just started out a couple properties, a couple decisions earlier than what another person decided to do, or later than what another person decided to do. So I apologize, Chris, if this last question is a bit redundant with what you just answered, but every guest on the show, I have to ask them, what's one piece of advice that you would give a rookie investor that was in your shoes, with those 28 CDs for $99? Let's say they don't even have that yet. What's the first action that a rookie investor should be taking right now?
I'm going to answer it slightly different. Rather than go with an action, I'm just going to go with a reminder. Be patient. Give yourself some grace. It's okay to not be started already. You could have been on BiggerPockets for the past year and you're like, now you want to say, well, I have paralysis by analysis. Maybe not. Maybe it's okay to be patient. You don't have to be in a rush, because I'm a true believer that in any market during any cycle, you can be successful as a real estate investor. We all get to define what success means. I love what you said a second ago. My story isn't going to be someone else's story. And, I deal with a lot of investors at our company, and each of them gets to decide for themselves what success looks like. And for some of them, success means that they're moving very fast because they have a lot of knowledge. They have a really good understanding of what they're building. And for others, it's moving like really slow. And they'll tell me like, I'm so sorry, I'm only buying one house and then I'll buy another one a couple years from now. I'm like, there's zero reason to apologize for that. Patience is probably the thing that will keep you going. Patience is the thing that says, okay, I'm going to make decisions, but when I'm 100% comfortable. And if anybody tells you as an investor that if you don't buy now, you're going to miss this next great opportunity to make money, they may have something to sell. I don't know. The reality is that it's okay to tell other people that I don't really know what's going on, but I would love to help you in any way. If I can provide value to you and you can assist me, that'd be great. I've learned so much from just sitting down and having a coffee with people, even at this stage. For everybody watching, I've been doing this now for over 20 years, and I love meeting other investors because I learn all the time from others. I still practice patience to this day. I promise you that there are deals come across my desk that I want to do and I want to move on. And sometimes I'm nervous, like, man, if I don't buy this, someone else will. Sometimes the things I miss have been the best deals that I've done. So I just tell investors, be patient, give yourself some grace. If you want to get started, take the right steps. But when you get going, the amount of time you spend doing real estate, it pays off.
That's absolutely amazing advice, and it's only advice that we can get from experienced and seasoned veterans like yourself, Chris. And it's amazing to have that with, very cluttered environment that we're in now. That's let's get rich quick. We're going to be a millionaire with all these crazy appreciation rates in the next 5 years going on, or the last 5 years with the pandemic. It's tried and true, sticking to your principles, and it's not paralysis analysis sometimes. It is just patience, and that can be the best momentum you have in your portfolio. Is there anything else you would like to add before we have our wrap up here? I can't thank you enough for your time today so far.
I'll just tell everybody that you just heard my story. I started with one house and I lost money at it, but I learned a lot. So I don't want anybody that watches this show to ever look at me and say, REI Nation, and look how big they are and all. Please don't, because I started where everybody started. I just wanted to learn how to invest in real estate, and I've got 20 years. So if you're new, that's what I have. I have 20 years experience. That's all I have that's different. I was in everybody's shoes that's watching this show right now. So best of luck to everyone.
Chris, thank you so much for your time today. If you're looking to learn more about Chris, you can search his name over at BiggerPockets. And I'm Noah Bacon. You can also search my name on BiggerPockets. We have plenty of resources on how investors can get started in today's market. And if you like this video, please give it a thumbs up, and please subscribe to the Real Estate Rookie channel by BiggerPockets. We'll be sharing episodes just like Chris is here, where investors share their story on how they got started in real estate. Thank you so much, and we'll see you next time.